this one. Now let's begin with the problems in chapter 4. We have now 4-1, and the requirement is to prepare a statement of cost of goods manufactured. So in other words, we have now your statement of cost of goods manufactured in connection with a manufacturing concern. Then prepare an income statement using the cost of goods sold method, and prepare an income statement using the nature of expense method with supporting notes. So first, we have to begin with the determination of the total manufacturing cost. I understand everybody took accounting 1206 cost accounting, and we have taken up the preparation of this statement. Now we begin with raw materials inventory on January 1 and add raw material purchases. So we have the total raw materials available for use, and then we deduct the ending inventory, giving the raw materials used. And then we add direct labor of 950,000 and add factory overhead. Now for factory overhead, we have the following components: indirect labor, superintendents, light and heat and power, rent of the factory building, repair and maintenance of machinery, factory supplies used, and we have the depreciation of the machinery. Now take note that we have all of these factory overhead costs in or the cost incurred in the factory. Then we have the total of the manufacturing cost. Now remember, what are the manufacturing cost elements? We have raw materials, direct labor, and factory overhead. Now we call this the manufacturing cost elements. Now to the total manufacturing cost, we add your goods in process on January 1 and deduct the goods in process on December 31, we have the cost of goods manufactured, the cost of goods manufactured. Now that gives us your cost of goods manufactured using the cost of goods sold method. Now, second, we have your we have the income statement, using the cost of goods sold method. But above, we only have the answer to requirement number 1, the cost of goods manufactured. Now, we prepare the income statement in the second requirement by using the cost of goods sold method with supporting notes. So first, we have the net sales revenue and deduct the cost of goods sold of with notes numbers 1 and 2. So for note 1, we have the net sales revenue, sales, deduct the returns and allowances with the net sales. And then for cost of goods sold, the finished goods on January 1, we add the cost of goods manufactured, computed in requirement number 1, giving the goods available for sale. Then we deduct the finished goods on December 31. The difference is cost of goods sold. And so we now go back to the main statement, giving the gross profit or the gross income. And from the gross income, we have to add other income in note number 3. And in note number 3, we have other income, including gain from expropriation for 10,000, and we have now the interest income of 110,000. So we have the gain from expropriation. Now we have 100,000. 100,000. Please make correction. And then we have your interest income in the amount of 10,000. So we have now the total of 100,000 10,000 and 100,000. So again, please make correction. Gain from expropriation of asset, that's 100,000. And then interest income of 10,000 and gain on sale of equipment for 100,000, giving us the total of your other income in the amount of 210,000. So going back to the main statement, other income 210,000 from note number 3. And the total we deduct expenses, distribution cost, administrative expense, and other expense in notes 4, 5, and 6, respectively. So we have the total now, the expenses, and finally, we end up with income before tax and deduct the income tax of 320,000. We have finally the net income now using the cost of goods sold method. Now let's look at the distribution cost breakdown for note number 4, sales salaries, advertising, depreciation, and delivery expense. We have now the total of 830,000. And note number 5 for administrative expenses, office salaries, depreciation of office equipment, accounting and legal fees, and office expenses. Now for note number 6, that's other expense or the earthquake loss. So finally, again, we have the amount of net income in the amount of 500,000. That's your net income using the cost of goods sold method. Take note, no? 500,000. Then for the third requirement, we have now your income statement by using the nature of expense method. So again, we have the net sales revenue in note number 1. Then we add other income in note number 2 for the amount of 210,000. Okay, it's other income. And total, then we deduct the expenses. First, we have decrease in finished goods and goods in process. And then we have the raw materials used, direct labor, factory overhead, salaries, and advertising. Now, we have depreciation, delivery expenses, accounting and legal fees, office expenses, and finally other expense in note number 8, giving us the total of the expenses by using the nature of expense method and deduct the income tax. So finally, we end up with the amount of net income, which is equal to the net income by using we have the cost of goods sold method there. We have 500,000. So let's look at now the corresponding notes in the requirement for the nature of expense method, nature of expense method, okay? So note number 1, net sales revenue and all the other notes. So for note number 1, with we have now the net sales revenue. We have sales minus sales returns and allowances. So we have net sales. Then other income, gain from expropriation, interest income, and gain on sale of equipment. Now we have the total similar to the number 2 method, or number 1 method, the cost of goods sold method. Decrease in finished goods and goods in process. So you now compare the beginning and the ending inventory. So finally, we have the differences or the decreases, no? Why 360,000 is ending up with 300,000, meaning there's a decrease of 60,000. So the total of the decreases is 130,000. And in note number 3, decrease is treated as a part of your expenses, no? So we have the amount of 130,000. Then raw materials used as computed also in the number 2 requirement. We have the amount of 2,920. Then factory overhead for a total 1,120. Salaries for total of 550,000, and depreciation 110,000, and other expense. So we finally ended up with the same amount of net income. And try to compare the number 2, and then number 2 is using the cost of goods sold method, and number 3 is using the nature of expense method. Okay, now that's problem for this one. We now move on to a problem for this 2. For this 2 again is requiring for an income statement with supporting notes. So we have now your income statement for the year ended December 31, 2021. So again, with supporting notes, we have the net sales revenue, note 1, cost of goods sold, note 2. Then we have the gross income and other income to be added, deduct the expenses, distribution costs, administrative expenses, other expenses, income before tax, then we deduct the income tax, and finally, the net income. So we again use the cost of goods sold method. Now let's look at the notes, numbers 1 to 6. Okay. For note number 1, we have the net sales revenue giving us the net sales of 8,600,000. Then cost of goods sold, take note that this is a merchandising concern. For this one is a manufacturing concern. That's why we involve the manufacturing cost and the cost of goods manufactured. So now with cost of goods sold, we have the merchandise inventory on January 1. We add purchases and then add freight in, then deduct discounts. We have the goods available for sale. Then deduct your ending inventory, giving us the cost of goods sold before the write-down and loss from inventory write-down in the amount of 150,000. So ending up with cost of goods sold after the inventory write-down. Then other income, we have dividend income, gain on sale of equipment, and interest revenue. For the distribution cost, we have delivery expense, depreciation of the delivery truck, of the store equipment, sales salaries, and store supplies. For the administrative expenses in note 5, contribution, depreciation of office, doubtful accounts, and office salaries for the total. And loss on trading securities is other expenses. Okay, now we move on to the next problem. We have for the 5, asking for a single statement of comprehensive income. Now take note that in 4-1 and 4-2, we have income statements. Now this time in 4-5, we have the statement of comprehensive income. So let's see the difference. For we have to begin with dividend income from investments, distribution income from trust, interest income on deposits, income from bank treasury bills, income from dealing in securities and derivatives held for trading. And we have now your other income. Then total income of 11,200,000. Then for the expenses, We have the administrative staff cost, sundry administrative cost, and finance cost. Now, for the total, and we deduct or we have to determine the income before income tax and deduct the income tax expense. Finally, net income. The other comprehensive income to be reclassified to profit or loss, unrealized gain on forward contract designed as cash flow heads for 400,000, and we have the comprehensive income. Take note that with regards to comprehensive income, partly will be charged to profit or loss or partly to retained earnings. So this time, we have the comprehensive income of 4.6 million. Then we go to for the 6. Again, another single statement of comprehensive income. Okay, so it's still your take note of the heading. It's very important, especially if you are asked to answer straight problems. So we have sales, we deduct cost of goods sold, we have the gross income or gross profit, then we add other income and share of profit of associate, we have the total income, then we have the expenses, including distribution costs and administrative expenses and finance costs. So we have the income before income tax. Finally, we deduct the income tax expense, and finally, the net income. Other comprehensive income to be reclassified to profit or loss, we have the translation loss and other comprehensive income not to be reclassified to profit or loss. We have the revaluation surplus, which will be extended to the statement of equity. So we have the comprehensive income of 3.3 million. So that's now to the total of 3.3 million for the total comprehensive income. Now take note, we have the other income components of 250,000 and gain on sale of equipment of 100,000. Now that is a problem for the 6, and then we move on to the multiple choice problems. Now we have a long set of multiple choice problems and questions which we are going to answer. So now, by the way, class, if you have any question, you just send a message to me. And now I cannot answer any question yet because I am trying to finish up to chapter 9. No? So if ever you have questions, just send a message. I will answer all of them tomorrow na lang before the reporters will start. Okay, so I hope I can finish up to chapter 9. This is quite a long way to go, but anyway, I am hoping that I can finish. Okay, and for that's 8, what total amount should be included in distribution expenses for the current year? So we have now to include distribution or marketing expenses, advertising, freight out, rent of office space, sales salaries and commission, and the total distribution cost. So we have now the answer of 4 million 5 letter C, 4,550,000. Please review the additions or deductions whatsoever, and remind me of the whatever errors in the message. Okay, now in 4-9 we have to determine administrative expenses. So we have property taxes, doubtful accounts, officers salaries, insurance, and total of 4.2 million. That's letter D. Then we go to number 10 with two questions. One, what amount should be reported as sales for the current year? And question two, the amount to be reported as purchases. So with question number one, to be reported as sales, we have the income before income tax of 2,100,000, and we divide it by 70%. The fact that the income tax rate is 30%. So meaning 100% minus 30%. That's your income before income tax. So we have 3 million, and then 3 million, that's your income before income tax. Divide it by 25%. Okay? So divide it by 25%. So that gives us your amount of sales equal to 12 million. So 12 million. Considering that your cost of goods sold is 40%, your interest expense is 5%, and we have now your other data given. So ending up with 25% as computed below. Sales, 100%, cost of goods sold, 20% divided by 40%. So it's 50%. Operating expenses of 20% and interest expense equal to 5%. So income before income tax of equivalent to 25%. Now in question number two, the amount of purchases, cost of goods sold is 50% of 12 million, 6 million. By the way, 12 million is the amount of sales, and we multiply by 120%. We now get the amount of purchases of 7.2 million. Then we move on to number 11. What amount should be reported as direct labor cost incurred? So total manufacturing cost, we have to deduct goods in process and for 600,000. Then we have the cost of goods manufactured of 5.4 million. Then we have finished goods and again of 1,080,000. That gives us 18%. The cost of goods sold of 4,320,000, equivalent to 72%. Then total manufacturing cost is cost of goods sold divided by 72% or 6 million. Direct labor cost is 30% of 6 million. That's 1.8 million. Next, we go to problem number 12. Determine the amount to be reported as cost of goods sold for the current year. So we have now raw materials purchased. Then we add the amount of freight in and deduct increase in raw materials. Now, increase in raw materials meaning the ending is more than the beginning, and the fact that normally we add the beginning and we deduct the ending. That's why the ending we are deducting 150,000. So finally, the raw materials used and add direct labor and factory overhead. We have the total manufacturing cost, and we have decrease in goods in process to be added. Why do we add? Because beginning goods in process normally is added and the ending is deducted. So if there's a decrease, meaning the beginning is more than the ending. So you have to use the sign of the bigger amount, and that is your goods in process beginning. Then we have the cost of goods manufactured, and finally decrease in finished goods is still to be added, and we have the cost of goods sold. That's now for requirement number 12. Requirement number 13, we have the amount that should be reported as cost of goods manufactured, and number 2, to be reported as cost of goods sold. So for question number 1, the answer is B, 7.2 million. Number 2 is C, for requirement for the 13. So the answer in question number 2 is letter C. Now here there is still number 3. However, we have only 2 requirements to answer. So number 1 requirement is cost of goods manufactured. So we now begin with beginning materials. We add purchases, deduct discounts, add transportation in or freight in. So we now get the raw materials available for use, deduct the ending materials of 600,000. That's now among the debits, and we deduct 200,000. So we now get 400,000. We have the raw materials used. So the raw materials used, and then add direct labor and manufacturing overhead for 1.5 million. So total manufacturing cost, and we have now the beginning goods in process for 300,000 for the beginning, and the difference 7.2 million, the total cost of goods in process, then deduct the ending goods in process, deduct 200,000, we now get cost of goods manufactured of 7 million, then beginning finished goods to be added, and ending finished goods to be deducted. So finally, we have the cost of goods sold. Now, please study very well. Problem number 13. It's quite different, no, from the rest. So, what are the answers now? The cost of goods manufactured in the amount of 7 million. So, the cost of goods manufactured, that's in requirement number 1. The amount, the answer is 7 million. So actually your requirement number 1 should be revised. The 7 million of letter C, that's the answer of question number 2. While the answer to cost of goods sold, the number 2 requirement, the cost of goods sold is 7.1 million. Okay? So let's try to change our answers in conformity with the requirements. So question number 1, the answer is C. Question number 1, the answer is C. That's your cost of goods manufactured. Okay? We relate this to our solution, 7 million. And question number 2 is cost of goods sold. So the amount is 7.1 million, and that is letter C. So in other words, question number 1, will you correct it? The answer is C. Question number 2 is still C. So eliminate question number 3. Since we have only 2 questions in for the 13, I hope you are getting the corrections. Then we go to problem for the 14. What amount should be reported as gross purchases? So we have the beginning inventory, and temporarily your gross purchases will be a question mark. Your 8.2 million, that will be a question mark, blank first, no? And then we have the freight in, and deduct the purchase returns. Goods available for sale is equal to 8 million. And we have the ending inventory of 500,000. And so we have now the cost of goods sold equal to 1,250,000 times 6. So that will be equal to 7.5 million. And the answer, no, is to number 14. The answer is D. Now we have a wrong answer, 7.5 million. Actually, the missing mark is, the question I mean is the squeeze amount. That's 8.2 million. It's not the cost of goods sold. So your final answer, number 14, is D. That's the correct answer, 8.2 million, which you are going to determine by working back. So from cost of goods sold, you are going to add back ending inventory, the fact that you are deducting, but normally. But if you work back, then you are going to change the sign. 7.5 million, add back 500,000, you get 8 million, and then you are going to add 900,000, 8.9 million, and the minus 700,000. The sum of the beginning inventory and your purchase returns. So you end up with the squeeze figure being your gross purchases. Now take note, the following amounts were given. Beginning inventory, 400,000. Then your freight in for 300,000. Purchase returns of 900,000. And you have the ending inventory of 500,000. And the distribution cost is given at 1,250,000, which becomes the basis in computing for your cost of goods sold. So as stated, the cost of goods sold is 6 times the distribution cost. That's why you are multiplying 1,250,000 by 6. So finally, we have 4 dash 14. Your answer is letter D. Now we go to number 15. What's the amount to be reported as gross sales in number 15? So we have now inventory on January 1. We add purchases, deduct returns and allowances. We have the goods available for sale. Then we have to deduct the ending inventory. We have cost of goods sold. Net sales is taken by dividing the amount of cost of goods sold by 80%, considering that the gross profit rate is 20, yes, 20%. So meaning there are two components of your net sales. We have cost of goods sold and gross profit. So net sales is cost of goods sold divided by 80%, and we have to add back sales returns and allowances. Finally, we have the gross sales equal to 8.5 million. So for problem 15, the answer is B as in boy. Now number 16, what amount should be reported as suggested net income for the current year? So we have now in number 16, the answer is the 8,750,000 net income per book. Then we add the unrealized loss and adjustment of profit of prior year. So we have now the adjusted net income. Number 17, the question is asking for the amount of income before tax. So in number 17, we have now the reported income before tax for 5 million. That's in number 17. The reported income before tax of 5 million, then credit adjustment of profit of prior year for 500,000. We deduct dividend received from SIM of 400,000, gain on sale of equity investment And we have the corrected income before tax of 3.1 million. So that's now letter D for number 17. Then we go to number 18. Number 18, the question is, what's the amount should be reported as other comprehensive income for the current year? And number 2, should be reported as other comprehensive income to be reclassified to retained earnings. And 3, amount that should be reported as comprehensive income for the current year. So first, on sir question number 1, we have other comprehensive income for the current year. We have now unrealized loss on investment equity, gain on debt investment. Then we have unrealized gain on futures contract designated as cash flow heads. Then translation loss on foreign operation, net remeasurement gain on defined benefit plan, loss on credit risk of a financial liability at fair. We have now your FVPL, no, for 300,000, and we have now your revaluation surplus during the year and the net amount of OCI gain for 3.2 million. That's letter C. Now you try to review on the components of your other comprehensive income. Try to review what are included as part of the OCI chargeable to other comprehensive income for the current year, and those that will be treated as OCI chargeable to retained earnings. Okay. So we have now question number 1 is letter C. Number 2, unrealized loss on equity investment, 1 million, net remeasurement gain, loss on credit risk, and we have now your revaluation surplus during the year with the OCI reclassified to retained earnings. The answer is letter A. So for the total of net income, 4.5 million, then the other comprehensive income, 3.2 million, the total and income from continuing operations and income from discontinued operations, we have now the amount of 4,500,000 net income. The unrealized gain on financial asset at FVPL is already included in income from continuing operations. So the answer to number 3 is letter B. Now we go to problem number 19. And we have, in problem 19, we have 4 questions. And number 1 is, what amount should be reported as cost of goods sold? So we have the inventory in January 1. Then we add purchases, total goods available for sale, deduct the inventory December 31, at net realizable value for 700,000. Then we have the cost of goods sold after the inventory. Write down in the amount of 4 million. That's question number 1. Then question number 2, what amount should be reported as total expenses before income tax? So we have now the amount of 2,350,000. That's letter A, including salaries, contribution, delivery, miscellaneous expense, doubtful accounts, depreciation, loss on sale of investment, and total expenses before tax. In question number 3, what amount should be reported as net income for the current year? So we have now sales minus cost of goods sold. We have gross income. Then we have to add a dividend income, a total income, then we have the total expenses, the income before tax, then we have the income tax expense, income from continuing operations, then income from discontinued operations in the amount of 500,000. That's already net of tax. So net income of 2.5 million. That's now for question number 3. So question number 3 is letter B. And question number 4, what amount should be reported as retained earnings on December 31? We have retained earnings beginning. Then we add net income. We deduct dividends declared. And so we have the retained earnings at the end of the year. Now we have the answers to the multiple choice theory of number 4-20 up to 23. Okay? So na-share screen natin ang solutions to 4-20. We have 1 to 10. 4-21. We have 1 to 5. 4-22, 1 to 5, and 4-23. Again, we have 1 to 5. Okay? So that ends chapter 4. Now we are ready to move on to chapter 5. Okay, chapter. Okay, we now begin with chapter 5 for problem 5-1. And your chapter 5 is statement of changes in equity. So we now begin with 5-1. We have the statement of retained earnings. So we now start with the heading statement of retained earnings for December 31, 2021, the end of the year. So we have now retained earnings on January 1 of 200,000. Then we add prior period error or over depreciation in 2020. So we are going to add back because over depreciation meaning it reduced net income of the prior period and also the retained earnings. Which ended up with retained earnings beginning. So now we have to add back as a correction and change in accounting policy from FIFO to weighted average method is credit adjustment. Credit, so we are going to add corrected beginning balance, retained earnings. Then we have the net income for 2021 and decrease in appropriation for treasury share. The total now 1,950,000. Now meaning you reduce your appropriation for treasury share. Then deduct cash dividends paid and current appropriation for contingencies. You have your retained earnings at the end of the period. Second requirement, still a statement to retained earnings, 5-2. So we start with net income, loss from fire is deducted, goodwill impairment as well, loss on sale of equipment, gain on retirement of bonds payable, and gain on life insurance settlement. So we have now your adjusted net income of 3,050,000. Then we have now your balance of the retained earnings. Beginning, we have the compensation of prior period not accrued. So we have to deduct. It was supposed to be a deduction. So the effect was retained earnings overstated. Then correction of prior period credit error being a credit. So we now get the adjusted beginning balance of 2.5 million, the net income as adjusted of 3,050,000 computed above. We now get the share net income for share dividend, 700,000. Loss on retirement to preference share and appropriation for treasury shares of 1 million, giving us the balance on December 31. That's the balance of retained earnings at the end of 2021. Now we go to problem 5-3, comparative statements of income and retained earnings. So we have now the comparative income statement 2021 and 22 for sales, cost of goods sold, gross income, expenses, and net income. And we have the comparative statement of retained earnings for 2021 and 2022. So we have now your retained earnings, January 1. Then we add net income, we deduct dividends. We have the retained earnings at the end. Then for the requirement is your comparative statement of income and retained earnings. Now we go to 5-4. 5-4 is you are now dealing with the requirement. Prepare a statement of changes in equity for the year ended December 31, 2021. So for the heading statement of changes in equity for December 31, 2021. Now we involve the ordinary and the preference shares and the share premium and the retained earnings and the treasury stock. Now these are our columnar headings. For the balances of the ordinary shares and the ordinary share capital and the share premium and your retained earnings based on the given amounts. Then issuance of preference shares of 5 million and the share premium involved is 400,000. Then the purchase of treasury ordinary shares. So we have treasury stock of 320,000 and the issuance of the ordinary shares. Now these are additional issuances. Dividends of ordinary deducted from retained earnings and the issuance of treasury stock for 50,000 share premium added and we deduct from treasury stock. So only part of the treasury stock was reissued. Dividends to preference, then overstatement of 2020 ending inventory, an adjustment to retained earnings, and finally the net income of 2,250,000, giving us the balances on December 31. Okay, we go 5-6, multiple choice problem. 5-6, what amount should be reported as total shareholders equity at year end? So in 5-6, the total shareholders equity is the sum of 7.5 million and we deduct 300,000. So that ends up with 7.2 million for 5-6. So take note, your total stockholders equity of 7.5 million, the share capital, share premium, and the retained earnings, 7.5 million. But we deduct the amount of 300,000 included, no? So that's your treasury shares. Next, 5-7, the amount that should be reported as shareholders equity at year end. Again, we have answer B of 8.9 million. Okay, then we go to 5-8. What amount should be reported as shareholders' equity? So we begin from the given amount of sales and deduct the total expenses, the net income. We add retained earnings beginning, deduct dividends. So we have the retained earnings at the end. For preference share capital, add ordinary share, share premium, and we have the retained earnings, total ending balance, and we have to deduct the treasury shares. So 500,000. So the total stockholders equity for 5-8 in the amount of 8 million. So that's why 5-8 is letter A. Then for 5-9, the amount of shareholders equity, share capital, share premium, retained earnings, unappropriated and appropriated. Then we have the revaluation surplus, cumulative translation adjustment, being a credit, and the actuarial loss. Fully recognized in OCI, deduct 1 million, and we have the treasury shares at cost of 2 million, giving us the total shareholders equity of 31.5 million. Now we have the answer to 5-9. 5-9 is letter A. Then the solution to the multiple choice theory in 5-10. Next, we go to chapter 6. Chapter 6, we now begin with the multiple choice problems in chapter 6. Question number 1. What amount should be recognized as an impairment loss for 2021? So the answer is B. That's 1.2 million. The carrying amount of 3.2 million. And then we are going to have the fair value less cost of disposal net of 2 million. So we have the impairment loss of 1.2 million. Provision of PFRS 5, paragraph 5, that an entity shall measure non-current asset or disposal group classified as held for sale at the lower of carrying amount and fair value less cost of disposal. So at the lower. So we have now the sales price of 1,850,000, the carrying amount of 2 million, the loss on disposal equal to 150,000. So what amount should be recorded as impairment loss? We have 1.2 million. Then 6.2, we have two requirements. Number 1, what amount should be reported as impairment loss? So we have now the carrying amount, fair value less cost of disposal. We have the impairment loss of 100 or 550,000 to answer question 1. And question number 2, the answer is C. That's for 150,000, the loss on disposal. Then problem 6-3 with 4 requirements. Number 1 is what is the adjusting carrying amount of the land on June 30, 2021? So for fair value, 3.3 million, we deduct the cost of disposal. So the adjusted carrying amount, answer is letter A. Question number 2. The adjusted carrying amount of the land on December 31, 2021. So with the fair value, we have the cost of disposal fair value less cost of disposal of 3 million. Thus, on December 31, 2021, the asset classified as held for sale should be measured at the fair value less cost of disposal of 3 million because this amount is lower than the adjusted carrying amount of 3.1 million on June 30, 2021. Now that answers question number 2 is letter C for 3 million. Then question number 3, what total amount should be reported as impairment loss? For number 3, we have the impairment loss total for 300,000. That's letter B. And question number 4, the answer for the revaluation surplus at the end of 2021, fair value on June 30, carrying amount. Then we have the revaluation surplus on classification date, and we have now on June 30 for 200,000. We have the total revaluation surplus on December 31, 2021. So now we have the answer as letter A for question number 4. Then we go to 6-4. 6-4 is another multiple choice problem with again 4 requirements. 1, what is the adjusted carrying amount of the land on December 31, 2021? So with the fair value on October 1, then deduct cost of disposal, the adjusted carrying amount on October 1 of 5.4 million. That's letter C. Then question number 2, the impairment loss equals 100,000. That's question number 2 for letter A. Question number 3, what should be reported as revaluation surplus? So question number 3, the answer is B. That's 2 million for the revaluation surplus total. And question number 4, disposal of land in 2022, the amount of 600,000 or letter D. Then we have 6-5 with again 3 requirements. What amount of impairment loss should be recognized on December 31, 2021? Okay, with question number 5. What question number 1? Let me check, repeat the requirement. What amount in OCI should be recognized in the statement of comprehensive income for the year ended December 31, 2022? So for requirement number 1, fair value December 31, 2022, fair value December 31, 2021. So we have the revaluation surplus in 2022 considered as OCI for 1.5 million. So that's B. Number 2, the gain or loss on sale of land. So we have now in question number 2, sales price of 8 million. The carrying amount equal to the fair value on July 1 of 7.6 million. The gain on sale of 400,000. Now question number 3, the amount of OCI that should be recycled to retain earnings. So question number 3, revaluation surplus of 2021, the amount of 1 million. 2022 is 1.5 million. So the total of 2.5 million. We have the reduction by July 1, 2023 in the amount of 900,000. So we have now the revaluation surplus reclassified to retained earnings of 1.6 million. That's question number 3. And the answer is letter B. Then we go to problem number 6, again with 3 requirements. Number 1, what amount should be reported as impairment loss for 2021? The carrying amount on December 31, 2021 is 5 million. Then we deduct the fair value less cost of disposal of 4.4 million. The impairment loss is 600,000. Question number 2. What amount should the equipment be measured on December 31, 2022? So the carrying amount on December 31, 2022 is 4 million. The fair value less cost of disposal of 4.3 million minus 50,000 or 4,250,000. The equipment is measured at the carrying amount of 4 million on December 31, 2022 on the basis that there was no classification as held for sale because this amount is lower than the fair value less cost of disposal, which is 4,250,000. So the answer to number 2 is letter B. Next, number 3, what amount should be reported as loss on reclassification in 2022? The answer is C, 400,000. Adjusted carrying amount per book at the end of 2021, and we have the amount at the end of 2022. So we have the loss on reclassification for 400,000. So question number 3 is letter C. Now we go to 6-7, again with the 3 requirements. What amount of impairment loss should be recognized on December 31, 2021? So we have now the impairment loss to be recognized on December 31, 2021. So first, we have the cost on January 1, 2021 for 5 million. And then we have the accumulated depreciation on December 31, 2022. So that's 5 million divided by 10 years and multiplied by 2 years. That's up to December 31, 2022. Then the carrying amount on December 31, 2022 is 4 million. Then we have the fair value less cost of disposal of 3.3 million minus 100,000. So we have 3.2 million. The impairment loss for 2022, that's the amount of 800,000. Now the impairment loss for 2022. That answers question number 1. The answer is 800,000. It's supposed to be letter C. But for 2022, what amount of impairment loss should be recognized on December 31, 2022? So that's supposed to be 800,000, and that would be letter C. Then question number 2. What's the measurement of the equipment that ceases to be held for sale on December 31, 2023? So we now have the carrying amount on December 31, 2022, 4 million. depreciation that would have been recognized in 2023 is 500,000. That's dividing 5 million by 10. So 500,000. The carrying amount to December 31, 2023 is 3.5 million. So the recoverable amount is 3,800,000 minus 200,000. That's 3.6 million. So the question number 2, what is the measurement of the equipment on December 31, 2023? So for the amount of 3.5 million, that's whatever is the lower figure. Then for question number 3, what amount should be recognized as gain on reclassification of the equipment in 2023? So measurement of the equipment, 3.5 million. Carrying amount on December 31, 2022 is 3.2 million. The gain on reclassification is letter B. So that's for 300,000. Next, we move on to question number 8. 8 has 3 questions. So we now begin with what is the carrying amount of the equipment on December 31, 2021 before classification as held for sale. So we have now the answer to question number 1. That's letter B. For the amount of the company purchased an equipment for 5 million on January 1, 2021. The equipment had useful life of 5 million. That's for 5 years. So 5 million divided by 5 years. So annually, the depreciation is 1 million. So in question number 1, the carrying amount of the equipment is 5 million minus 1 million. So it means only 4 million. So that's letter B. Question number 2, what amount of impairment loss should be recognized in 2021? So we now have the cost in January 1, 2021, the accumulated depreciation of 1 million. So the carrying amount to December 31, 2021 before reclassification was 4 million. Then fair value less cost of disposal of only 3.5 million. We have the impairment loss for 2021. That's for the amount of 500,000. So question number 2 is letter C. Then question number 3, what amount should be included in profit or loss in 2022 as a result of the reclassification of the equipment to property, plant, and equipment? So in number 3, the cost on January 1, then accumulated depreciation for 2 years, the carrying amount, no classification as held for sale. In the event that it's a reclassification only. So we now get the fair value less cost of disposal for only 2.7 million. The measurement of equipment as PPE of 2.7 million. Under PFRS 5, paragraph 27, an entity shall measure a non-current asset that ceases to be classified as held for sale at the lower between the carrying amount on the basis that the asset had never been classified as held for sale and the recoverable amount on the date of the decision to sell. The recoverable amount is the higher between the fair value less cost of disposal and the value in use. So the measurement of the equipment on December 31, 2022 is only 2.7 million, while the carrying amount per book is in the amount of 3.5 million. So we have now the loss on reclassification equal to 800,000. Now that's number 3. So question number 3, the answer is letter B. And question number 4, what is the carrying amount of the equipment on December 31, 2023? So the answer is the amount of 1.8 million. That's a letter B for question number 4. Then we go to 6-9. 6-9, we have the amount to be reported as gain on reversal of impairment in 2021. So we have the cost, accumulated depreciation of 3 million, the carrying amount of 2 million, fair value less cost of disposal 1.3 million minus 100,000 or 1.2 million. Impairment loss on July 1, 2021 is for the amount of 800,000. But the gain on reversal of impairment, fair value less cost of disposal on December 31, 2021, 1,450,000. The carrying amount equal to fair value less cost of disposal 1.2 million. The gain on reversal or of 250,000. That's letter C. Under IFRS, an asset classified as held for sale is no longer depreciated. Thus, there is no depreciation from July 1 to December 31, 2021. Now we have problem number 10 with 2 questions. What amount should be recognized as impairment loss on April 1, 2021? We have the cost less accumulated depreciation. We have the difference as carrying amount on April 1, 2021. Then the fair value less cost of disposal on April 1, 2021 of only 450,000. The impairment loss on April 1, 2021 for 800,000. We now debit to impairment loss and credit machine held for sale in the amount of 800,000. Now for question 2, the question is, what is the amount of gain on reversal of impairment? So we have now the gain on reversal of impairment in the amount of 200,000. So PFRS 5 paragraph 25 provides that an entity shall not depreciate a non-current asset while it's classified as held for sale or while it's part of a disposal group classified as held for sale. Now we have the solution to 6-11. Next, we go to chapter 7. Chapter 7 is discontinued operation. Chapter 7. So we have now your chapter 7 question. Questions are in multiple choice type up to 7-15. So in 7-1, question number 1, what amount should be reported as pre-tax loss from the discontinued segment for 2022? 2021. So we have now total revenues, deduct total expenses and impairment loss, employee termination costs. So the answer to number 1 is letter A. Then for 7.2, that's letter C, 1,750,000. For 7-3, the amount of 1,680,000 or letter D. We have now the sales of the South and expenses. So it incurred an operating loss on disposal. We have the total loss, then tax saving. We have the loss from discontinued operations, letter D. Then number 4, we have the answers as 7-4. Answer is letter D for 14 million loss from discontinued operations, including the operating loss, the impairment loss, termination cost, and the total loss. We have the tax benefit loss from discontinued operations for 7-4. Then 7-5, we have the income tax. Income before tax equal to 7 million. That's the answer to 7-5 is letter D. The question is, what amount should be reported as pre-tax income or loss from discontinued operations? So we have now the 7-5, the sales, the CAC, 23 million, then deduct the cost of goods sold of 14,000 and other expenses of 17,000. So meaning there's a loss of 8,000. And the gain on disposal of 15,000, we have the income before tax equal to 7,000. So 7,000 income, the answer is equal to letter B because the question is asking for the pre-tax income or loss. So the answer to question 7-5 is letter D. That's income before tax. So just make correction, that's before tax, no? Then number 6, the answer to number 6 is we have the total amount that should be recognized as pre-tax loss from discontinued operation for the year December 31, 2021. So the amount of 3.5 million or letter A. Then number 7, the answer is letter B for number 7. That's the operating loss for the year, 8 million, and we have the loss disposal of 500,000. So 8,500,000, letter B. The expected operating loss in 2022 and gain on disposal are not recognized in 2021. 7-8, the answer is 8.5 million. That's letter D for the carrying amount, and we have the fair value less cost of disposal. Now, PFRS 5 provides that an entity shall measure a non-current asset or disposal group classified as held for sale at the lower of carrying amount and fair value less cost of disposal. So 7-8, the answer is 8.5 million. Then 7-9, the answer is A, the loss from discontinued operations. Number 10, the answer is B, 2.1 million loss from discontinued operations. 11, we have net income in the amount of 500,000. However, the amount is income or loss from discontinued operation. So the answer is 200,000. It's a squeeze figure for number 11. Then number 12, what amount should be reported as net income for 2021? That's number 12. So the loss from discontinued operations as asked for in 7-12. I mean, the question is how much is the net income for 2021? So it's the amount of 6,250,000 with supporting computation for loss from discontinued operation. Then 7-13, again asking for how much should they report the components operations for 2021. So number 13, the answer is letter B. The 400 should be reported as loss on discontinued operations. Then number 14, the answer is B, 6,550,000. The net income for 2021. Question number 14. Question number 1. It's for letter B for 6,550,000 with supporting computation for the loss after tax. Then number 15, the multiple choice theory. Okay, I'll end the discussions here. Now for the remaining chapter 8. Okay, we have, I'll share screen, share 8. Okay, that's 8. And okay, the solutions to the multiple choice questions of chapter 8. Okay, that's 8. We have a lot of questions here in chapter 8. And finally, the last chapter, chapter 9. For all the answers. Now you take note, you study the solutions. By tomorrow, I will answer your questions. Okay? So I will answer your questions by tomorrow with regards to the problems and the solutions that we have for this day. So up to chapter 9 from chapter 4. Okay, so that ends chapter 9. Okay, by tomorrow, I will answer questions before we begin and we go to the reporters.